Hi folks, this is Mike Mott with Mott & Associates. I'm here today to present our economic update for March 2014. We're going to spend a little time talking about what happened to the markets over the last quarter, and we're also going to spend a little time talking about what may happen or what may drive the markets going forward in the days and weeks ahead. But before we get started, if you please do me a little favor and take a few seconds to watch the disclosure at the end that we'll read when we're finished this presentation. Markets were volatile in 2013, the first quarter of 2013, when chilly weather and lackluster economic data took the steam out of stocks, especially compared to the fourth quarter of 2013. The economic indices were basically flat for the quarter. The Dow was losing 0.72%, the S&P 500 gained 1.3%, and the NASDAQ composite grew 0.54%. Those stocks may have lost momentum as a whole. We found several individual places where, on a case-by-case basis, the fundamentals seem to be getting a lot better overall. After growing 2.6% for the fourth quarter of 2013, the economy has probably slowed just a little bit. We don't have the official numbers yet, but we think that most of the experts predict that the GDP, or the gross domestic product, is probably going to be up somewhere between 1.2 and 1.5%. Now, we all remember the unusually cold weather in the United States the first quarter of this year. That's caused slowdowns in the labor market, it's caused slowdowns in the manufacturing market, the real estate market, and several other sections of our economy. So now that spring is here, we're hoping that warmth is going to trigger some new economic activity and hopefully improve the economic fundamentals of the country. So despite the lower economic growth in the first quarter, many analysts still believe that we're on track to exceed or at least equal last year's economic growth in GDP, somewhere between 2.8 and 3.0%. The February jobs report showed that jobs actually accelerated and grew faster than expected. Now that may not quite make much sense, because I'm sure you've heard that the unemployment rate actually ticked up. Well, why did that happen? We think it was more because there was more Americans coming back into the workforce rather than more people filing for unemployment. That's a very optimistic sign for the labor market. All told, when you look at all the official numbers and the estimates coming in, we think we've actually added almost 500,000 new jobs to our economy for this year so far. The Federal Reserve held its meeting this quarter and voted to continue dialing back its monthly bond purchases. That was in order to keep interest rates low. That's also called tapering, when they're dialing back those bond purchases. At this rate, if the Fed continues to do that, the quantitative easing program should end by the end of this year. The Fed Chair, Janet Yellen, who is the chairman of the Federal Reserve, testified before Congress and made her point very clear. She believes that the economy is growing, but believes that they will continue the quantitative easing for the near future. They're going to wait and see how if the economy continues to grow. Global worries dominated much of the news through February and March. The stock market had lots of jitters as a result of it, because they were very worried about how the Ukraine situation was going to affect global trade. Emerging markets saw significant outflows of money during this period of time, as investors have feared that the tapering that we talked about is going to affect those developing markets, and so a lot of money has left the emerging markets and has been repatriated to the domestic markets. So as we look ahead, the markets are certainly, we think, are going to be volatile over the next few months. The investors are looking at the jobs reports, they're looking at the economic data. Earnings season's upon us at this point in time. There's a lot of estimates that say the first quarter earnings are probably going to be flat to even negative. So with that, we think that's going to cause a lot of volatility in the market. The current expectations going forward, we think is slow. There may be some slow demand in the first quarter, which will be reported. And on the other hand, there's optimism is high that A strong second quarter may come along, and if that happens, the good news is that that should send stocks higher. So we'll shift to something more local. I'll tell you about a couple of events that Mott & Associates will be having in the next few weeks and months. One of them is the DeSoto Parade, which is April 26th. We'll start at 5:30. It's going to be at one of the best places in town to watch the parade at the corner of 32nd and Manatee Avenue, our office. And we're really excited about our next event called Shred Day, which is coming up on May the 10th. It'll be from 10 to 1. Both of these events, well, let me tell you about the Shred Day. We're going to have a big shred truck there. We're going to have food and entertainment. It'd be a great time to bring yourself, your family, your friends to dispose of some of that sensitive information. So we sure look forward to having you at both of those events. So once again, this is Mike Mott with Mott & Associates. I hope you've enjoyed this presentation. If you have, we'd love to hear your comments, either in the comment section below, or you can give us a call at area code 941-746-3216. Let me give you that to you again, 941-746-3216. I hope you have a great day. And oh, by the way, now's the time to watch that disclosure.
While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision.